Bitcoin price and hashrate divergence may set the scene for a potential rally, historical data shows. September's counter-seasonal price trend has already started to show signs of this divergence trend, helping BTC. The divergence between Bitcoin's hash rate and price could signal a potential rally in prices according to historical data. September's counter-seasonal price trend has already started to show signs of this divergence trend playing out. Publicly traded miners have increased their market share post-halving by raising their computing power and started accumulating Bitcoin, or potentially reducing market supply and raising a chance of upside to the price. A divergence between Bitcoin BTC price and its hash rate or network's total computing power could potentially point towards a rally in the price of the largest digital asset. Historically, these divergences have occurred only a few times in the past 3 years. In some cases, Bitcoin prices have reached a local bottom during these events, followed by a rally as the market catches up with the rising hash rate. Bitcoin network's hash rates rise and fall depending on how many miners have their mining computers online to validate transactions. Consistent with this pattern, Bitcoin has already shown signs of recovery, gaining about since the local bottom on Sept, representing an increase in value. This divergence between Bitcoin's BTC price and its hash rate started to shape up in July and then persisted into early September when the computing power of the network reached an all-time high of 690 exahashes per second as on a 7-day moving average, while Bitcoin's price was near $54,000. A significant factor contributing to the recent surge in hash rate is the activity of publicly traded mining companies. Before the halving, where Bitcoin rewards get cut in half, the hash rate peaked at 650 EH and dropped to 550 ETH in June, as less efficient miners exited the network due to higher competition. It has now returned to pre-halving levels as publicly traded miners that are well capitalized have increased their market share by raising their computing power. In fact, data from the 16 public companies show that they have almost reached a 23% market share in production, the highest since at least January 2023, according to the industry journal The Miner Mag. It is likely that publicly traded miners will continue to capture a larger share of the hash rate over time as they compete to stay profitable post-halving. Counter-seasonal trend. September has historically been dubbed a bearish month for Bitcoin, with historical data from CoinLast indicating an average price decline of 4%. However, this year has defied that trend, with Bitcoin posting a 7% increase so far. This counter-seasonal trend could be indicating that due to the lower Bitcoin price and rising hash rate, the price could be playing catch up with the hash rate, potentially setting up for another rally. Of course, there are other market factors such as interest rate decisions could also catalyze this price change. Additionally, the next difficulty adjustment scheduled for Sept 25 and projected to decrease by 5% could also indicate that prices may be catching up. Blocks are currently being mined at an average of 10.5 minutes, according to mempool.space. This indicates a potential slowdown in the hash rate as price plays catch-up, miners accumulating. Another factor that could signal a potential rise in price is what miners are doing with their mined Bitcoin. Glassnode data indicates that from November to August, miners consistently sold Bitcoin to fund their operations due to the halving, marking one of the longest periods of sell pressure on record. However, in the past 30 days, miners began accumulating Bitcoin in their wallets, suggesting that the financial strain from the halving is largely over. If miners are distributing less Bitcoin, this reduces the supply, entering the market, increasing the chance of potentially helping the price.